Let's try and do one more take here. Of course, we gotta hide those sweatpants because you know how we do. Business up top, casual on the bottom, baby. What's up, guys, and welcome to another episode of Drive to Thrive. Before we get started today, I just want to wish everybody a happy and prosperous 2023. Hopefully we have a better market this year than we did last year, but ultimately my hopes aren't all the way up there because I still see some pain ahead of us, especially in Q1, Q2 of this year. It is going to be a stock pickers market, and I don't think it's going to be as easy as it was in, let's say, year 2000 and 2001, where you could just throw a dart and any stock you picked went up 50, 100, 200%. So definitely some work will be required this year. You'll have to do your homework, and if I can recommend one thing, is stick to stocks that you enjoy, that you know a little bit more about that space, that will make you ultimately a little bit more successful. Now, my plan for this year is to be a little bit more consistent with my uploading. Last year I was somewhat sporadic with how I released this video, so maybe try to come up with a certain day and produce a video every single week. And also, I'd like to hit 500 subscribers. So guys, if you want to help me out and support this channel, don't forget to smash that like button, subscribe, tell your friends about it, especially if you find some value in the content I provide. But without further ado, let's go over to my computer and let's get started. Alright, so here we go. In today's video, we'll be talking about NIO, but I won't be talking about NIO as a long-term investment and a Hodl kind of investment, but I'll be talking about NIO as a short-term trade and why I think it's a better short-term trade than it is a long-term investment. And also I'll tell you what kind of a trade I just got into this week, so hopefully you enjoy this. Now, starting off on our weekly chart, we can see that NIO hasn't got spared, this destruction that happened last year here. Since that all-time highs of around $67, we're currently down around 84%. So ultimately a pretty massive pullback here. But if we zoom out on this weekly chart, we can see that we got the support here highlighted in the green, and this is where I think buyers are going to start stepping in and possibly try to run up this price higher. So let's zoom in and let's kind of see what's happening here. In this orange line, I have this descending trend line. Now, as we can see, we had a reaction going back to January of 2021, another reaction here in February, July of 2021, a few reactions here in November 21, completely collapsed down, had a little bit of a bounce up, another reaction here in September, and as recent as December 2022. So very strong descending trend line, and so far it's been holding it religiously. So let's get rid of these red circles and let's zoom in into our daily chart. But like I mentioned, this green support zone here at around $9.75 is starting to prove that possibly this could be a bottom, especially in the short term here. We can see again lots of reactions here along the bottom. Another one as recent as January 4th. We do have that volume coming in, some buyers are stepping in, and this is why I think this is a nice short-term trade on NIO, but not really a long-term hodl yet. So zooming out of this chart and let's kind of take a look at the MACD. So currently the MACD has crossed over again underneath the zero line, so a bearish tone to it. If we can manage to cross back up, that could be seen as a very bullish here. And again, that stochastic RSI does have some room to move higher. So keep an eye out here over the next week or so. Do we cross over, which would be pretty bullish, or do we end up bouncing off of here and going lower, which would be seen quite bearish? Now, going over to our weekly chart, again, the MACD here, it's kind of flat here, uncertain whether it wants to break up or down, still underneath the zero line, so a bearish tone to this, bearish momentum, and the stochastic RSI is on its way up and still does have some clear room above us here, so possibly another spike left in this run. On the monthly chart, things are looking not any better than it is on the other two. Again, speeding down towards this bearish momentum. The stochastic RSI, however, is crossing up and looks like there's some life, starting to come into this RSI here. So we'll see what can happen. Now on this chart here, let's go back to our daily. We can see that so far, we've used this 20-day moving average as either resistance or support. So far we're bouncing off of here. Let's change this to 100-day moving average and let's see what that's providing for us. So again, so far used it as a resistance more than support. And if we go over to the 200-day moving average, we can see that we're still pointing down. So ultimately more bearish than bullish, but I am expecting a technical bounce off this level, and a setup that I'll be looking for is for us to start breaking above this descending trend line, use it as support, and then revisit this $14, possibly try and tag this 200-day moving average at around $17. And if we're lucky, we could move as high as $20, which would be a nice return, of around 100% if you buy the stock. Now I'll talk about my trade in a little bit here. My exit strategy on this trade, so let's zoom in into our charts here. My exit strategy on NIO is going to be, I'll have a stop loss sitting somewhere underneath this wick. So this was around 8.30. So my stop loss is going to be sitting around $8. If you break $8, I'm out of NIO, and I'll be looking forward to create another bottom here. So that is kind of my targets. This is kind of my exit strategy, and we'll see ultimately what ends up happening. So let me tell you why I don't think NIO is a good long-term hodl kind of stock. Let's quickly go over to investing.com and let's take a look at these margins here. So going over to our operating margins, they're at -26%, our net profit margins -25%, and return on investment is around a -13%. So not really good margins on the stock yet. Let's see what the balance sheet looks like. So definitely total debt to equity is around 92-93%. So again, quite high, and these guys aren't generating any kind of cash flow. So not the kind of stock you want to be looking for in this kind of bearish market. So that is the reason why I'm not looking at NIO as a long-term hodl and more or less as a quick trade. All right, guys, now let's go over and let's discuss the trade that I got into. So here's a trade that I got into on NIO, and it was an option trade. I ended up buying the March 17th, 2023 expiration, which gives me just a little bit over 2 months here to play with. And I bought the $10 strike for $1.73. So my break even on this trade is if you take the strike, which is $10 plus what I paid for, $1.73. So my break even on this trade is $11.73. Currently we're sitting at around that $10.30, give or take. So when I go over to my second picture, you'll see that on this option, when we had the spike back in December 7th here, this option was costing about $4.45, whereas currently you can buy it for about $1.76. So there is more than 100% return in this option, whereas if you look at the stock, the returns aren't quite as juicy. So as you saw from the previous picture here, when we had that spike here on December 7th here, our stock price got to around $14. Now from current level, to $14, that's about a return of around 35%, whereas that stock option was generating more than 100% return. So again, just looking at that risk reward, potential, it just makes more sense to buy an option instead of getting into the stock for NIO here, especially if you're expecting that bounce, like I am here in the short term. So that's the reason why I ended up buying those options instead of just straight up stock. Now, as I mentioned, my break even on that trade is about $11.73. So that is somewhere around here. So as long as NIO gets about this $11.73 here before my expiration, I'll be generating a pretty nice return. So that is it, guys. I hope you enjoyed this video. If you did, do me a huge favor and smash that like button and consider subscribing. Otherwise, thank you so much for investing your time in me, and I'll see you in another video. Cheers.